Looking.
I'm here.
There you go. Okay, great.
I'm here.
Good. All right, good to see everybody. We're excited to go. We've got a lot to cover. Boy, can you believe it's July 8th? We have so much that's gone on in the market and some new things going on in the market with this third quarter and kicking off July. You know what? There's a lot of rebalancing going on in the markets, and it's not always easy to see for us, but we're going to change that. We're going to look deep into what's going on in the market and help you have some ideas of how you can trade with sector rotations, different things that are going on. And so what I want to start out, because we have a lot to cover right away, is I want to ask these guys and we'll go ahead and start with you, Jeffrey Turnmeyer. What is the most important thing on your mind right now, kicking off July and quarter three?
Well, the Atlanta Fed's kind of announcing that we had 2 consecutive quarters of negative GDP. So that really puts in my mind, did the recession start way back when, or, are we still looking down the barrel like most of the mainstream media is talking about? And, what kind of strategies are going to work in this kind of market? So those are the main ideas I'm looking at. And then we'll talk more about it when we get to my portion here.
Perfect. Yes, I know you had some great ideas on that. I can't wait to catch up on all of that. Jeffrey Smith. Hey, by the way, we've got the 3 Jeffs here. So 3 Jeffs and a Don, and it's going to be great. But Jeffrey Smith, what do you think? What's the most important thing on your mind right now?
Well, I think we're starting to see some pressure in the commodity markets based off the US dollar. The dollar's made a 20-year high. I think that's kind of piling into it. And I'll kind of discuss that a little more once we get to moi. But I think really right now, just being on the commodity side of things, the commodities got whacked real hard on Tuesday. You saw crude oil get dumped 16%, and now it's bounced back up about 8 or 9%. So I think it was kind of an overreaction, but we'll see how it does going forward.
Sounds good. We'll look forward to hearing more about that. Don Yoakum, what's on your mind? What's the most important thing on your mind right now?
I think the most important thing to me is, in this kind of environment, you need to be able to come with a lot of ideas. You need to generate a lot of ideas, and you need to be able to test them. It's a perfect opportunity to refine that process, make yourself a better trader, stay on top of a market that is very dynamic and the conditions are constantly changing. And that's kind of how I built my process, and I continue to build it, right? And when I'm going to be on here in a little bit, I want everybody to think about a stock. We do this in my Telegram channel a couple times a week. It's bring your own stock, you bring it, and I'll put it through my process, tell you what I kind of think if there's a trade opportunity or not. So think about some stocks, and when I come on, drop them in the channel and we'll look at them.
Excellent. I love that. Live analysis, the process that Don goes through every time on anything, trade entries and so forth. So Jeff Zenanari, welcome back. What's on your mind? What's the most important thing going on in your mind right now?
Hello, Celeste.
Hey.
Hello, pros. It's good to be back. There's a lot on my mind. It's a new quarter. It's a new month, but it's the same old bear market. The thing is, the market likes to slice things up in time increments. And I'm looking at some interesting money flows at the beginning of July into stocks that haven't been really looked at by institutions in a while. And so I pick up on those moves early, and I ride them all month, and I'll talk about the system later. But I'm trying to stay nimble. I'm trying to stay agnostic. Call me a little bit of a perma bear where I come from. I'm trying to shed that because I'm seeing some long opportunities for the first time, some really exciting ones for the first time in a few months.
Very interesting. Can't wait to hear more about that. Exactly, that money flow is really powerful. I caught some of that, what Jeff Zenanari does in that. Can't wait for you all to hear about it.
Yeah, so, Ray just posted in this thing. This guy, Ray, said Jeff Z Elite Money Flow is absolutely killing it. Yep. That's what I'm going to talk about later, Ray. For those of you that don't have it, let's go.
Yeah, let's go.
New quarter.
It's not so much about what's going on in the market. It's all about how do you make money in the market? And these guys are all doing it. And that's why you all are here. So you can turn all these news events, everything that's going on, into money-making events, because there's a lot of risk in the market, right? I mean, we've all seen it all year long. and we continue to have headlines. We need to understand how to navigate. And that's why we come back week after week here on Ask the Pros to help you understand how these pros are navigating and what they're doing to measure and to measure success, and also to help to refine that risk and lower the risk. And so we're trying to transfer those ideas to you. And these are just examples that we're going to go through. Nobody's guaranteeing anything, but we're just trying to transfer that knowledge. And to do that today, we have 4 really awesome pros. We've got Jeffrey Turnmeyer back with us from Jeffrey Turnmeyer Trading. He's the youngest trader because he started in the 3rd grade. He's a civil engineer also by background. He has this Echo trade system. It's powerful. I've seen this in action. It's really, really cool what he does. And he's able to use that to help him, you know, call tops and bottoms. And I know it's not about calling tops and bottoms, but it sure is helpful when you kind of understand where the swings in the market are. So we're glad to have him back with us. And you can follow him. He's got this really great YouTube channel and this, this 30 minutes of awesomeness that he does throughout the week. If you can catch that, we'll share some of those links here in a little bit as well. And we're glad to have back with us Don Yoakum. He is like the economist of the economists. What I love about Don too, which I think you got to pay really close attention to, is how he navigated, you know, the 08 financial crisis. That is huge. Because what are we going through now? Well, it's not exactly the same, but some of the same things that he uses, the tools that he used back then, he's still using those today. They're still working. He's running a fantastic service through the Telegram channel. You can get connected with him on Telegram, and it's right there on the screen how you can connect with him on there. And just really great information. Of course, he has managed, you know, quite a bit of money, and he has been, you know, hedge fund analyst, investment banking, all types of great things to his name that he has done. So we're glad to have him back with us. And of course, Professor Smith, Jeffrey Smith. I spent a lot of hours in the classroom with him. I was the student. He transferred great knowledge. He started when he was 17, so he's the next youngest, next to Jeffrey Turnmeyer, trading in the markets, has a lot of experience, has award-winning education. You can catch it. He's got this great encyclopedia of trading education. Highly recommend that you get involved with that. He also has there's a Telegram channel that they are on as well. And of course, his great trade of the day service that you can get his take on the market every single day. And of course, Jeff Zanadari. We don't always get to have Jeff here. He has a really busy schedule. So we're really glad that he was able to come here, especially at the first of the month, because he has a real savvy way of looking at this market. I've already seen it. It's really, really awesome. This guy, I mean, can you believe it? 10 years without a losing quarter. 10 years. That's how good this stuff is that you're going to get today. So listen up. You can see how to get involved with him on the screen as well.
That's including the financial crisis. That's including the financial crisis, those 10 years. A lot of people went, you know what? They went out in a box during that period of time.
That'd be me. Yeah. So, well, let's get started. We've got a lot to go cover today. Jeffrey Turnmeyer, let's get started with you. What's going on with this recession? You kind of called it really a couple of weeks ago. Bring us up to speed.
Yeah. Well, I mean, the Atlanta Fed coming out last week with a negative 1% estimate on June 30th. And then this week, starting on Tuesday, they were revising it down 110% to over 2% negative estimate for Q2. And anybody can go look it up. You can see Q1 was negative 1.6%. And by all definitions, I mean, go look at dictionary.com, look up recession, 2 consecutive quarters of negative GDP. It is kind of the standard out there. You know, we do have an economic research board of whatever.gov that officially certifies recessions. And, you know, some of them, they say, oh, there's just a week or 2 weeks or 2 months, or, you know, we've had some super short ones. But when I look at the general, simple economic principles, you know, 2 quarters of negative GDP to me says that's economic contraction in the economy. I mean, it doesn't take a bunch of PhDs to tell us that the stock market's been down, prices have been going up. You see layoffs in all these big tech companies, and the things that topped in November were tech and crypto and things with high flying price to sales ratios, like Roger and I have talked about a few times on here. Those things all topped in November, and it's been down ever since. You know, crypto's down almost 75% at the peak. tech stocks have dropped more during this recession than they did during COVID. I mean, it's like Roger said, you're telling me things are worse right now than they were back then when we all were worried about our health. I mean, you know, I don't know what else says recession than, you know, things like that contracting. So another thing, I'm going to share my screen here really quickly.
Go for it.
And let's see. See if I can share me. There we go. Let's jump over here to, this is the Federal Reserve right here. And this is the money supply chart. And everybody's been talking about inflation. Now you go look up inflation in a dictionary and it says it's increased money supply. We've got that right here, right down this M2 line. This is the money supply, right down the line there. We go from 19,000, that's like 19 trillion, 19.3 trillion in January 2021 to over 21.6 trillion right there in May. And the June estimate will come out at the end of July. Well, let's check this out real quick. So if you have 21,000 or 21 trillion at the end of May, and you started with 19.3 trillion back in January 21, what's an increase of $2.2 trillion of money supply? Well, 2.2 trillion increase divided by the 19 trillion starting in January 21, that's an 11.8% inflation in the money supply. That number sounds a lot like the inflation number that they've been kicking around to me. And that's just the Fed pumping the money into the market. I mean, what did we expect was going to happen when the money supply increased? And this relates to cryptos. When you hear about inflationary cryptos that have no limit on their supply, well, this same thing happens and the price goes down. Things like Bitcoin that have a fixed amount of coins, they're deflationary. They don't, their money supply doesn't increase. These are simple economic principles that don't take PhDs to explain it to us. So one thing this does create, though, is uncertainty in the markets. When you hear the people that are supposed to be guiding us, controlling the economy, Jerome Powell and his board of Federal Reserve presidents and stuff like that. Well, they create a lot of uncertainty in the markets. And I think that's what we've seen all year here with these big swings coming all the way down. And this is just the S&P 500 on a daily basis. And we're coming on right up, we're trying to break through this gap that we had back here in early June. And then we'll have a little bit of, we had some resistance there last week. We'll probably have a little bit of resistance there again this time. And if we can get above 39.45, I think we're going to come up and try to break into this other gap we had just above that around the 4,000 area. Breaking through that can get us back up into this zone where we consolidated at the end of May and beginning of June in around the 4,100 level. So higher prices are kind of in the cards here. We've had several green days in a row here, working on another one today. So this is all a positive sign for maybe rounding the bottom of this recession and leading the way out of it. Now, I'm not going to say that we won't see another big dip in here, because we probably will, especially as we get up near the 4,200 level. We'll probably retrace again back into the low 4,000s before we can gather some strength to get out of here. But it also leaves the opportunity that we may revisit the bottom one more time. So in uncertain times like this, I have a thing that doesn't rely on any of the market trends. We'll be going over that live here at 1:00 after this is over. And I want to invite everybody to come to that, jeffreytrader.com/live. You can just hop on over there after we're done here. And like Celeste said in the beginning, I have 30 minutes awesome on Tuesdays, every Tuesday at 5 p.m. And that's jeffreytrader.com/YouTube. And you can hop over there. And even if you don't come join me, at 1, you can come join me on next Tuesday at 5. So
it's great information. So yeah, we dropped the link in there as well. So yeah, if you like that type of analysis that Jeffrey Turnmeyer is just giving you, I think he'll just have a wealth of information. I know that's been very helpful for me navigating in this market. Let's go to the next Jeff Smith. Hey, Jeff Smith, I know you've got kind of a new algo that you're bringing out. That's kind of looks like to me like it's flashing a buy. Tell us what's going on with that 3-day algo you have.
Well, what we like to look at, we like to grab, in fact, here, I'll just show it to you. How's that?
That's perfect.
There we go. So what you're looking at here, and you can change the colors, whatever you want, just my eyeballs like this better. But you got the first column, of course, you got the symbols down here, and these are all the commodities and stuff. You got the month open down the left side. You have the last price, the currently traded price. And the FTD is the first 3 days, and that's the first 3 days of the month. That's the highest high and the lowest low during that time period. The WS high, WS low is well, we call it week start, just because like this week, not all weeks start on Monday, right? So, but this is basically Tuesday's high and low on this week. So if we're currently trading above those first 3 days and above Tuesday's high, and we're above the month open, this is all green. So your first 6 columns are all green. If you're below all that, like down here on the bonds, you're all weak. So I always kind of keep this on the background so I can kind of see what's strong, what's weak on a longer term basis, right? So, and if you look at what the indexes have done, they've actually reversed and done really, really well. And when I saw the sell off on Tuesday and copper and crude and all of those markets, my first thought was okay, they're probably going to bounce. The question is, do they get back at least above their month open? And they still have not done that yet, even though we've had a nice little retracement back up. But my guess, they're going to try to come up and kind of fail at those areas and kind of roll back over again. But that's to be seen. You look at just the crude oil markets themselves. Of course, right now we're trying to ask the government to take some EPA regulations off for refining, and even on the LNG side of things. I don't know if they will oblige in that or not. Knowing this administration, probably not. But we're still having difficulty getting a lot of our LNG and stuff like that out of here. They're starting to export, and you probably heard this, our strategic oil supplies out to Italy and Netherlands, and over here in Southeast Asia, even China is taking some of it, which is kind of crazy, especially since Russia's right next door to them. They get all the oil that they want. And in fact, let me show you this. This is kind of neat. Copied this picture here. This is India and China's spending on Russian oil. The small little bars is last year, the bigger bars are this year. And you'll notice that India has increased their buying of Russian oil by 538%, and China has increased it by 78%. So, and this is in billions of dollars that they've spent in US dollars. So we've got that happening, and now we have Yellen over there trying to kind of schmooze things over also. And I think that's one reason why we're kind of seeing, well, with our raising in interest rates, a lot of people are investing in our dollar. So you're starting to see the euro kind of get crunched a little bit. And I mean, this is at a 20-year low and the dollar's at a 20-year high. Duh. But anyway, the dollar's starting to kind of run into these commodities also. It's more expensive to purchase our wheat. I can get wheat cheaper over in Australia or anywhere else. It's going to make our corn more expensive. So it's putting some downside pressure. And I mean, you've seen wheat drop from, what was it, 12.80 a bushel, something like that. Now we're back down to $8. It's not quite cut in half, but it's almost there. But granted, this is usually where wheat has its lows, just because we're at the harvest lows. But we're probably going to have, going into next year, a lot more wheat because, well, it doesn't take as much inputs, fertilizers to grow wheat as it does corn and soybean. Corn is probably the most demanding on the inputs. So my guess, we're going to start seeing some acreage shifting going into next year. I mean, you look at the price of gasoline. What do you think farmers pay for it, right? I mean, they got to harvest, and it takes a lot of gas to fill up a combine. And if you have 2 or 3 of them, right, then you got to get the grain, whatever, out of the field to the elevator. So there's a lot of cost in that. And because of that, they're going to be kind of, even though commodities have gone up, they're not going to be making as much. And so going into next year, they're going to try to save a lot of money by doing something that doesn't have as much fertilizer. And hopefully the price of gasoline and stuff like that will come down. The EIA petroleum status report came out this week. They kind of skipped it a couple of weeks ago. I don't know if anybody noticed that. They said they were having system problems, and it just so happened that the oil guys were supposed to be meeting at the White House that week. I thought that was kind of interesting. But anyway, we had a big surplus in crude, but we had a big draw on the gasoline side. And when we're operating at 95% capacity, there's still a big demand on the gasoline. It's just that they can't get enough crude to do it, and they're going to keep producing crude oil. You're going to start getting a surplus in it. But we still have a net negative on the year. We're still down about 2.5 million barrels on crude for the year. And so, I mean, we should still be kind of hanging up here. The big thing is, I mean, we've kind of cut off the Russian ships coming over here, buying Russian oil, and a lot of other countries have. But Russia's still making a ton of money off their oil just because of other countries buying it. And I think if those countries were to cut them off, you'd probably see crude oil go up to $200. But it all depends on who gets it and who doesn't. And I mean, it's kind of a neat game, a chess game, to kind of see what happens in all of this. But I've loved the past, well, actually this week, just because of the volatility. I mean, it's been great, but you've really got to be kind of nimble, and you can't sit there and go, well, if you were long crude on Monday and Tuesday, ouch. But if you jumped into it on midday Wednesday or something like that, you've done really well. So you've got to be very, very nimble in these markets. And I think that's the biggest thing is, I guess it was Jeff Z was saying, I've been a perma bear. I love that phrase. That's cool. and sometimes that'll turn into permafrost, so you have to be really careful. But he's thawing out, he said, so that's good. But I mean, and you do get into those moods of, man, I've shorted this thing 3 days in a row, I'm going to short it again today, and then all of a sudden you get hung. But that's where the numbers really come in. That's why I kind of keep this up. Granted, we're moving up, but are they going to come up here and just like Jeff T was saying, they might come up into a little area and roll back over and give us a little correction, and then maybe flip back around and rock it back up. And that's kind of what I'm looking at right now.
Excellent. That's really great information. I like what Trader said in the chat, that it's like playing a 3-dimensional chess game. And that's a good way to put it. Yeah, lots going on. Well, we've got more to hear. So thanks, Jeff Smith, for sharing all that. And we've got Don Yoakum up next. Want to find out about your process. And Don, I know a lot of people typed in some stock symbols. Do you need any of those? Are you good to go? You might be on mute. I think you're on mute.
Yeah, I wrote them all down. Won't be able to get through all of them probably, but I am going to get started. So here we go.
Here's the process. Write it down.
That's right.
Good stuff.
All right. Okay, so let's start with Jasmine, NVIDIA. This is one that we get a lot of questions about. Okay, you guys can all see my screen?
Yep.
All right, NVIDIA. So this a bit of context. This is my 100% number one key tool. I personally think the more things you throw into a model, the less reliable it is. This focusing on this single view of volume, what it is telling you, and what this blue stuff is telling you is over this time frame. So like here, I'm looking at 30 days on NVIDIA. Over this time frame, this is the distribution of volume at each price that occurred, right? So a lot traded right here at 158.52. Another bunch traded up here. And over time, the basic idea is, if you think a bell curve, not that it will always create a bell curve, but the market wants to find equilibrium. It wants to find balance. It's searching. It's a dynamic equilibrium. And that manifests itself as bell-ish types curve. And so that's what I use to get a sense of what direction we're going next and how far. Excuse me. So with NVIDIA, just on the 30-day, and I usually start out with 30 or 90 days. This looks pretty good. So you've got this declining volume down here, right? So less and less activity. And we're back at a level where, there seems to be a gap. So NVIDIA is looking pretty good on the 30-day. I mean, you could look at a 186 here. I'm going to hang on to this idea. And let's just kind of look around at a couple of them. Now, this 90 day, so this is, over the last 3 months, not looking, this looks a little more bearish. But again, here you see the same 186 level, right? So you see this, what you see over the, from way up here at 280 is this increasing volume, and it just keeps falling, with more volume as it sells off, right? And then you've got what might be some range of consolidation here, but we'll have to see what the economy brings, right? You also have to take into mind the broader macro context, whatever fundamental information you might have, whatever. So it would, based on these two things, the 30 and the 90 day, I say the 30 day looks like you could have a pretty big pop. But, just know that, the 90 day is weighing on it, which could be just based on the overall sentiment of the market, right? That's there is a risk to going long in this market. So that's NVIDIA. That's what I think, Jasmine. It's what I'm going to look at myself. Now, Amazon, you asked about Amazon. I want you guys to jump on. I'm doing a webinar today at 4 o'clock where I will go much more in depth through my entire screening process, but I'm also got a case study of Amazon. So if you want to find out about Amazon, up on that, Jasmine, please. All right, that'd be great. And
You're going to do that through the Prosperity Pub, right?
Yeah, we're doing a live webinar, and so I do this. We call this a buy your own stock, where everybody tells me what stocks they want me to look at. We do that every Tuesday and Thursday at 11 o'clock. So that's just through my Prosperity Pub channel. It's free to join. You guys jump in, and I'll look at your ideas. So that's a couple times a week. This afternoon in the webinar, I'm going to really walk through my entire process, soup to nuts, plus talk about, overall market conditions. We're going to do that case study on Amazon. And then we're going to go through what the market is live right now, right after the close. Look at several names, and I'm going to build a watch list that I'll ultimately share with the subscribers. So stocks to look at with potential action.
Excellent. Yeah, that's great. And I think you've did you go through, Norm was asking if you could go through your how you read your volume chart.
Well, that's what we're going to be doing today at 4 o'clock.
Okay. Perfect. Well, timing is great. I loved what you said too, because I was reviewing what you're going to go through today. I think it's going to be fantastic, very informational and educational for everyone. I loved how you called Amazon as like the canary in the coal mine. I can't wait to hear what you have to say about that.
Awesome.
When you follow Don, like I said, he's the economist of the economist. It's really fantastic information. All right, Jeff Santanari, man, the $1 million question. I want to know where the money is flowing. But I need to know, where's the market heading in July and this third quarter in the summer. So can you tell us where do you think, where are things going, and where's the money flowing? Help us out.
Well, the market's been obviously in a bearish way. I think everyone on this panel today has talked about how we're in a recession. We've had a couple of GDP readings that indicate as such. We're having companies left and right that are profit warning, they're downgrading. I expect that to continue. In the face of that, though, we're seeing a more resilient price action in stocks. We're seeing bottoming, intermediate bottoming, not like the full term bottom. I think, let me preface what I'm about to say by saying, I think we will have new lows on the year in Q4. We will end on lows, or at least experience lows in Q4. But July is looking like a bullish month. You guys are seeing it in the market already. You're seeing a little bit of a different atmosphere. And I'm seeing some massive flows into stocks that haven't gotten flows in a long time. I'm seeing huge daily range bars in stocks that normally have 200 basis point move all day are moving 500 basis points, 600 basis points, and stocks that are typically moving at twice the amount that the S&P normally moves, moving 3 times, 4 times, and having double-digit daily moves. So I like action. I go to where action is. I don't overthink it. I like to flow with it. I like to ride the back of the whales that are moving the markets. And I'm going to share my screen and show you a system that I have to do that, if you don't mind right now, Celeste.
Great, go for it. That'll be fantastic.
And we're going to dive right into this bad boy. And I'm going to explain to you this system that I created that's like super simple for people to follow. And it really takes advantage of this phenomenon of rebalancing that occurs on a month-to-month basis just because of the way the sausage is made on Wall Street. So it's a technique that's based on a predictable, repeatable monthly phenomenon. It happens within the first 2 trading days of every month. So we just had the first 2 trading days, and we had it on Friday, and then we had it on Monday. And so on the 3rd trading day, new trades came out. So most people wouldn't know this unless they worked on actual Wall Street, as I did. But every single month, a massive flood of capital pours into very specific funds, roughly $25 billion on average. The sudden surge in new cash forces large Wall Street institutions and funds to buy stocks. I found that Wall Street loves to dip their little toes in the water on certain stocks right at the beginning of the month. And if they like what they see, they ride them higher and higher all month long. You just need a way to get in ahead of them as they create this process. So look at January. Look what the markets were doing. They were tanking in January. Remember that? The S&P with this nasty chart here. The S&P fell 7.4% for the month. But on the first trading day of the month, I spotted a $1.9 billion money flow surge into Citigroup. So this bar here, this volume here, and this was the stock return for the day, which was a massive candle. And I have this like really complex system to pick up on when this is not normal and this is not normal. We've got magic. So 1.9 billion, huge amount of money to go into one stock in one day. Happened in January. Most investors, though, were steering clear because of the negative headlines. Citigroup failed to disclose reps, tax liens, and judgments, FINRA said, if you read financial planning. Citigroup was being fined by FINRA. The stock took a major hit, and the bad news kept rolling in. 7 days later, they issued a negative release, and the stock price cratered even more. Citigroup stock slides after capital, triggers pause in stock buybacks. But the $1.9 billion money flow, that was still clear as day. So I did what I always do, and I sent out a high conviction trade alert on Citi, and this is what it looked like. This was an actual stock pick from this year. This is not me back testing to the time of Martha Washington with homegirls wooden teeth. This happened this year. I give you the stock, I give you the limit, I give you the target, I give you the option, and boom. Anyone who took action on this trade alert made 7 times the average yearly S&P return within a month. 79% opportunity in Citi. Big household name, not like some little penny stock BS. So I got this letter from Michael. Doing great, Jeff. Up 60% on Citi last month. But the brutal market sell-off didn't end there. I don't have to tell you all that. We know the market's just been in a bad way, right? The markets kept tanking in February too, down another 4.3%. So everybody's like, I think this is the bottom. No, I think this is the bottom. And people are drawing nice, cute little squiggly lines. I'm sure you remember it. Most traders were ready to throw in the towel at that point, right? But all I was focused on, where was the next money flow going to hit? That's all I focused on. So like clockwork, on the 2nd of the month, there was a $220 million flow, which was very large for this stock. Allegheny Technologies, ATI. It's a mining company, a technology mining company. And lo and behold, on the 2nd day of the month, I saw this $220 million flow, a volume bar like you never see in the first 2 trading days of the month for this stock, a candle like you never see. And this is the visual representation of this tell that Wall Street's given us. And sure enough, ATI exploded for the rest of the month. It was a 96% opportunity in ATI. The rest of February, recent history, right? So you see the first 2 trading days of the month is when Wall Street, they tip their hand. Those of you that play poker, you're always looking for tells from your opponents. I'm looking for tells from Wall Street, and I'm sizing them up on the first 2 trading days of the month. Why not just the first? Because you need more of a data series to get true evidence. So you might get some outlier information with just one day. 2 days makes it a much more high probability bet. So that's when the fireworks begin. Think about it, right? Every 2 weeks, you and I are doing something to send stocks soaring. It's got nothing to do with our trading ability. It's got nothing to do with how we shop, though we've been spending a lot of money shopping out there. Everybody knows that. It's got nothing to do with bills we pay. Most people don't realize it, but 41% of working Americans have their paycheck set to automatically invest in their 401k. So like my wife's paycheck from her teaching job, they're taking money every 2 weeks out and they're buying, guess what? What are they doing with it? They're buying stocks. It's going right into Wall Street hands of the big institutions. And they have to buy stocks. with that money. So they invest money in the markets like they should, like they have to. But they don't just throw it in the S&P. They don't just throw it in the SPYs. You see, these crafty little money managers, they get paid hefty performance bonuses for beating the S&P. So they got to single out a few stocks each month that they can ride higher and higher. And they can't just buy all the stocks in one shot. They can't be like, oh, I love 88 as the price because that's the price I want to pay for it. They have to put on multiple days worth of the entire volume of the stock just to get a position on. So in the first 2 days of the month, it's test time, where they're pumping in large amounts of capital into a stock. If they like how the stock price reacts to their massive buys, then they confidently keep on buying, supporting their initial position, sending the stock price higher and higher for the rest of the month. Here's happening again in real time with VRTX, Vertex. This was a trade alert I sent out to the Money Flow Elite members. Funds probed the stock with the volume spike, just like that. Big bars on the volume and the stock move. On the first day of the month, they do this to gauge how sensitive a stock is to the large purchase. Everything checks out. They spend the rest of the month accumulating the stock and keeping it at the level. Because remember, they love the stock up to this price. So they keep accumulating it. That was a 19% gain on the call options. Watch it happen again and again. ATI, second day, $215 million flow, 96.8% in 1 month. You don't have to sit here all year waiting for this thing. In under a month. Schlumberger, the big oil services company, $610 million. Big flow on the first trading day of the month. The SLB call options gained 200% in 1 month. So here's how I track it. I have a Bloomberg. We spend about 25 G's. I go back and forth with my publishing partners on this all the time. I'm like, find some little geek on the street that's going to provide the same intel as my Bloomy does for 25 G's, and I'll be happy to hire him. But it's well worth it. It's a great expenditure. And inside that terminal, I have a proprietary built-in algorithm that looks at every stock in the market, scanning where these money flows are happening. So here's a behind-the-curtain screenshot with a real example for my best trade last year on Coterra. Coterra Energy, 33.83%. It was the number one performer in the S&P. And then boom, a massive $270 million money flow surge into the stock on the 2nd of September. We're right there. You can see the bar and you see the big movement in the stock. Those that took the trade crushed it. They crushed on this one. It wasn't 100%. It was not a 200%, not even 300%. It was a 423% gain.
That's
and you might be like, oh, yeah, it's a great gain in under a month. We had a 350% gain last month. Just the one we just closed out. So this is the kind of game I'm hunting with this strategy. This was my best trade though, issued last year. But again, we had a 350%er just closed out last month. So hopefully it's clear to you at this point, just throwing your money into the S&P or trading ridiculously complex trading strategies is perhaps not the best way to reach your goals. So it's important. Your timing right now couldn't be any better. We've had some of our best months this year when the S&P was crashing from its peak, like in January, down 24%. How? I put in a built-in hedge. That's what makes it a complete portfolio.
Love
At the
it.
beginning of every single month. Yeah, Celeste, this is the cool part. I issue out 6 standard money flow trade alerts, just like the ones I showed you today. They're just normal. We're looking for long cases. We're looking for monies flowing into stocks to ride them higher. But because of the extreme volatility in the markets, I hedged those 6 trades with 3 strategic short positions or bearish positions. And we use puts also. We look for the exact setup I just showed you, just in reverse. You can also see where the mutual funds, where the big fund managers, the pension funds, the hedge funds are selling out of to finance some of the new trades they're doing. I call this a money flow cluster. And here's what it looked like in January. Check this out.
Nice.
So this was the percent gain and on winners and losers. And we had a 352%er on a put in DGX. Schlumberger call made 200%. So we're big game hunting in this thing once again. And this was when the market was crashing, Celeste, and everybody's trying to bottom pick it and saying, BTFD, I've got the best BTFD system out there. Trust me. And I'm like, I don't care. I don't have to have the market reverse and go like fully higher for this thing to work. So watch it happen again in February. Overall, 80% gain on both the money flow trades and hedge positions. And so these were real recommendations, no back test, real life. March, same thing. two massive wins, the hedges for 156% and 285%. Not just saving the portfolio, we're given a 27% gain overall in month. And March was a terrible month in the stock market. Now, I can't promise you that every month we're going to see this massive success, but here's why it's critical you take action today. What I've seen being hedged is the only way to play the markets right now. So especially with this like intermediate trend trading type of strategy, because I don't have a crystal ball. Market could have a bad month in July. It could have a good month. The bet is though, that where the money is flowing out of stocks institutionally, those are the stocks that are going to lead us lower. And if we continue on the bull path, the ones that they're dumping all the money into in the beginning of the month are the ones that are going to continue accumulating all month long. So I've seen many traders blow up trying to swing trade shorter time frames. The number one mistake they made was not using a hedge strategy. Don't be one of these dudes. Harness market volatility, gain an edge in your trading by tracking institutional money flow. Today's your chance. Get in on 9 money flow trades that's triggered by my Bloomberg scanner inside my Money Flow Elite. I have a guy here, Ray, that already has it, and he said it was awesome. Thank you, Ray. So you get around 9 trades per month. They're still fresh. They're in there. You get the entry, the exit, the stock. I give you an option. Everything needs to succeed. You get your first trade alerts today. I'm also going to show you how to use options, get some leverage, and how to maximize the money flows. There's a video on how to do that. I do weekly review videos. So I'm going to update you on what's happening in our individual stocks, call out money flow developments across the markets. It's almost like an unfair advantage that you're going to have market insight to see what's coming next. And it keeps the conversation open. We do it live. We have reviews live. So we have a member portal area, 24/7, super slick, super interactive. You could use your phone, iPad, whatever. And it's 24/7 available, and it's all right there, secure online. Every month, and I had one this morning, we got a monthly market meetup, and we're live. You can ask me whatever you want live. You can ask me how to fix your relationship with your wife. I'm an expert on that. You can ask me how to cure your slife. You're probably swinging outside too far, taking the club back. I know about that too. You can ask me about why your other trading strategies are getting smoked as you're BTFDing 2022 bear market. We talk about whatever, but we're really going to talk about mostly our systems, what's working, alone what's not working, and explain to you why it's not working, which you'll never see many gurus doing. They don't like to talk about what's not working. And we'll go from there, but it's live, and it's fun. And so this is every month. And also another bonus you're going to get. You're going to get the ultimate guide, reverse money flows. Those were the shorts I was telling you about. It's why it's a complete system. It's why you have to have hedges. So take a look at it for yourself. What some of my top students have said about this strategy. Buck paid for his entire subscription in January in 1 month. Ray, I think he was here, says that big boy flow is not chasing crowded month-long trades, and that's the way to really do it. I made 44%. Brent said in January, let's go, Brent. Very satisfied, said Ruben. So these are some of the best stories I've heard from my students in the past, and they all have one thing in common. They took action. They hit it. You got to hit it. You got to you get small opportunities in life, and you got to hit. Today's my anniversary. It's my 16-year anniversary, Celeste. And
Congratulations.
Thank you. I met my wife, and I was like, I gotta get it. I gotta get this closed now.
That's all right.
This is an opportunity. So I took action.
Yeah.
Same thing with this stuff. You get these opportunities, you get these. I'm not saying you're going to marry me, and this is that crucial a life experience, but I'm saying you have to be a person who takes advantage of your shots. Okay. So normally it costs $19.97 to join Money Flow Elite for an entire year. We're in a recession, so we've tweaked it a little bit. So we're doing something really special for you guys today. I'm convinced them to slash the price. It's a no-brainer. It's not $19.97. It's not $997. It's not $497. Are you ready? You need 9 trades today. You can join for $97. Special. I can't take my kids out, the family of 5, to PF Chang's for $97, Celeste. You know what I'm saying?
Oh, totally.
Like that ship has sailed. We can't go to the Olive Garden, all you can eat pasta and breadsticks.
No.
That ship has sailed too. But you can get 9 money flow trades for $97 today. It's a special bundle price. It's about $10 a trade. This is the no-brainer of no-brainers. So here's the deal though. You have to join today before midnight. It's going to close, and then we go back to normal pricing. So it's a great way to get started with me. If you don't have any of my systems, see my thought process, learn how I interact with the market, ride these 9 trades for the month of July. And It's a special deal at a massive discount. Don't wait. Get in before too late. That's the price, $97. Listen, 30 days from now, if you hate it, we will return to you $97.
Yeah.
I mean, that's how confident we are. And we don't want this to be stressful. We know it's a hard time out there. That's why I was like, why don't we just sell it and give everybody an opportunity to get in at $97 for the month and take away that stress of like this big investment up front in this economy, which I know is crapping itself. So times are tough. We're doing everything we can to help. And I sleep really well at night knowing that people are paying $97 for all this research.
Yeah,
That's it. That's the end of my thing.
That's an incredible deal. Yeah, it is absolutely a no-brainer. There's some really good questions too. I want to get answered. People were typing in. Jeff, so do you end up holding these for the entire month, or do you target times to get out?
That's a good question, Celeste. So I have targets, and if we hit the targets, then I reevaluate, but I usually take the target. And we have stops that trigger us to get out. Sometimes I suspend the stops if there's like extreme volatility. I'm on top of the trades all the time, but we never like linger too long. We're out. We get out. So that's what this is. And the beauty of, go ahead. I'm sorry.
Do you ever go in and adjust the trades? Like you see something happen during the month and like, oh, I want to make an adjustment on this trade, or do you just pretty much put it on and?
Yeah, if there's a fundamental thing that happens that changes the landscape for the worse or for the better, I have gotten out of trades or been more motivated and thought they would go much higher. Like I've removed the target. I've removed the target on Coterra because of something that happened geopolitically, a macro thing that happened. It's an energy name. And I react to the markets. I'm a trader.
Yeah.
You have to, the first rule of trading is like make money. The second rule of trading is don't lose money. And the third rules are made to be broken. So you have to know when you tweak it a little bit, but I do. But the system like runs on autopilot for the most part. You really only have to be there 2 days in terms of sitting in front of your computer, putting the trade on and then taking it off, which is one of the most excellent parts about the system. It doesn't involve you geeking out like 24 hours a day watching the markets. I know a lot of people that have it, love that about it.
Excellent. Hey, another really great question. I want to get your answer on this. Is it too late? I mean, you put these out, maybe a couple of days ago. Is it too late? Have I missed out?
No, they're right. They're right there at the limit prices. I like all these stocks to keep going. We had one that ran right away and is like doing unbelievable for us, but this should be a pullback here soon. I'm going to adjust the price limit, bring it up a little bit on Monday. Yeah. But it's good to have your trades working too well too. So I can't complain about that. I think it's going to go much better even, but that's what it is.
Excellent. We'll get in there. There's the link. You can see to take this no-brainer trade. I mean, get in an opportunity to be able to buy several dinners for your family, whatever you want to do over the summer months, but great opportunities. And I know I saw some internal things going on. I know they are going to jack that price back up. So do make sure you get in there. Get this, it's the time is now. We've got this, we're into this third quarter. Things are shifting. You even heard Jeffrey say how he's like, hey, things are a little bit more bullish. It's like a great opportunity. As I said, I went in there, I looked at all these trade ideas as well. I think they're phenomenal. I think there's some really great money.
Thank you, Celeste. I appreciate it. And I give a write-up too. There's like there's the levels, there's the option play, and then there's a write-up on what risks might be out there, but what the big catalysts might be to make it go a lot better. So you learn a lot. You'll learn a lot in it on trend following and how institutions accumulate positions for sure. It's not. I know that there's nobody else doing it like this system out there.
It's beautiful. Love it. I just absolutely love how you get that flow. And that always changes. And you're right too. I mean, it's like, who wants to go dig this out themselves anyway? And you spend a lot of money and time invested into getting those things that we can't see, but we can piggyback for a very, very small fee and get these 350% returns at those types of returns.
All my strategies, Celeste, are based on, as a professional hedge fund trader, I come from the sell side in Wall Street with Bear Stearns back in the day. I know how the sausage is made in Wall Street. All my systems are based on gaining that kind of like insider knowledge of what they do. And they're all time sliced. So all my strategies are sliced based on when you should enter and when you should exit. I never randomly like walk into the market on like a Wednesday afternoon at noon and say, this is the time I need to put on a trade. I'm very I have a very tight methodology on when and how you should get in and out of the market. And it's time-based always. In the mornings, in the afternoon, in the beginnings of quarters, and the beginning is a month, the ends of months. I have those systems based on time much more than just like a specific price, if that makes any sense.
Yes,
So,
that makes great
yeah.
sense. A couple more questions. I want to clarify. I want to make sure that this is a monthly offer. They're getting this for $97 for this month, and then they'll have the option to, you know, continue if they want to. Clarify that, and then tell us
That's
about
right.
what kind of
That's
options
right.
typically do you do? What's the style?
Well, I'm writing that. So we're just outright. This is all like just we're just outright long calls and long puts. And I'm looking the next calendar, not the front month out. I'm looking the next calendar month out, because the front month is going to expire within the month is the main reason. And I'm looking for, you know, relatively decently priced options. I think the average premium on these trades is about $300 per contract. And I'm looking at close to in the money or at the money, so that we don't have too much decay. And yeah, we go from there. But of course, it's your life. You can use my strategy. You can get crazier. You can use different kinds of out of the money options. I've had guys go YOLO and make a lot more returns than what I'm posting. It's a free country, but I try to steer like the big ship down the middle for most people with like an average risk tolerance that do this sort of thing.
Love it. That's a phenomenal opportunity.
Yeah.
Adam has posted the link in there again. You can hit that link, get your credit card out, go fill in all the information, get the information today, study it over the weekend, get in on those trades today, and, you know, have a great month of earning great returns here with Jeff. It's an absolute
stress. It's a low stress commitment. It's a low commitment.
Yeah,
So
I love that.
that's a nice part about it in this economy.
Oh yeah, who doesn't love that? So make sure you get signed up for that, and appreciate all that information that you shared. That flow of money is so significant. And
thank you guys. I appreciate you all listening to my presentation, and it's been very nice to be here.
great. All right, link is still there, so you can get signed up. The deal closes at midnight tonight. Get it, but get it right now so that you can learn how to get those trades on this
Oh no,
afternoon.
the cost doesn't jump up. You can continue to pay the monthly cost. Someone's asking about the cost. To be clear, if you sign up for the monthly today, you're going to be grandfathered in. But they'll also give you an option to buy at a special yearly rate. So it's not going to like you buy it. It's not like one of these like trick like cable deals where you get like the first cable month for like $10 and it's $200. It'll never cost you more than $97 a month if you sign up today. To be clear.
Good. Perfect. That's going to be really, really super good.
Yeah.
So, all right. Well, thanks everyone. A couple of things I want to bring to your attention before we head out here. So you've got Don's Telegram. Adam has posted that in there as well. And then Jeffrey Turnmeyer is coming on live here in just a few more minutes. You got just enough time to get a drink of water, whatever you need to do. The value of the education, the value of the trades, the value of trading in any type of market continues at 1 o'clock. You're going to want to hear what Jeffrey Turnmeyer has to say. And as always, thanks everyone for being here. Have a great weekend, and we'll see y'all next time on Ask the Pros.
Thank you all.
All
Good
right.
job.
Thanks,
Thank you,
everybody.
guys.
Bye.
Yeah, great information. Love your Jeffrey Turnmeyer logo thing you have there on your. Say something, Jeff. That's cool how you did that. There you go.
Yeah, I got my
All
name
right,
on
we'll see
there,
y'all
and then I
next
can throw my link to the live.
Love it. I love it.
I'm
There you
joining.
go. So we'll be seeing you here in just a few minutes. You got enough time, Jeffrey, to, you know, run around and get ready to share.
Hop off,
Fire us.
visit the bathroom, come back.
Yeah. All right. Have a great
Bye,
weekend,
everybody.
everyone. We'll see you.